Welcome to Dragonfly Trading. Hope everybody's been doing well. If this is your first time here, my name is Carrie, and I'm a full-time trader and mentor in the crypto and Forex markets. Today's video, we're going to do an update on Bitcoin, ETH, and XRP. But before we get started, I have some new things to offer. I am offering 3 videos per week updates on Bitcoin, ETH, and XRP. I'm also offering a package that includes a live stream once per week. It'll be just for members. So you will be able to request all the coins that your hearts desire. And I'm also offering Euro, Gold, and DXY. The link is in the description below. Check it out on my website. Alright, let's get started. We are on Bitcoin. We are on the daily time frame. If Bitcoin continues to correct to the downside, we do not want Bitcoin to break the 618 that is sitting at 20,300. We want Bitcoin to stay above that fib level because we don't want it to break through the support and floor that it is built at the bottom here. Coming underneath that floor would be bearish for Bitcoin. As it looks so far, it has a very good chance of holding. But there's always a bull and there's always a bear scenario, and we will go over those. The bull scenario is that we want Bitcoin to at least give this leg a partner to the upside. This would make for a very big bear market rally that could even possibly take this all-time high as an expanded B wave. If it just gives this leg a partner, when it's done, whether it takes the all-time high or not, then this leg will get a partner to the downside. But the higher the B, the more bullish, because it could possibility never revisit this low. The more bullish option is that this was a bottom and that it was a wave 2, and that this 5-wave move is the start of something as a wave 1, and that it's currently pulling back for a wave 2. That it's going to make a huge bullish wave 3. At this point is when we want Bitcoin to fan out for an additional 4th that does not break the prior 4th and then push up for a 5th. This will confirm that we are back on a bull run. But we need this to happen right here. All right, let's take a look at the lower time frame. I do feel that this leg is at least going to get a partner to the downside. The big question is what's happening in the middle. We have several options. The first option is that it's creating a triangle, and that it's an A wave, a B wave, a C wave, D, and E. When it's finished contracting, this will put in this B wave down here, and then the partner leg will come. That is the first option. So basically, it's very simple. It will continue to consolidate inside these wedges, getting smaller and smaller, and then break to the downside. An alternate scenario is that it's creating an alternate triangle of A, B, C, D, E, and then it will give this leg a partner to the upside, coming back to the point of breakdown, putting in the B, and then we will get the partner leg to the downside. So between those two scenarios, the way to know is a break of this upper yellow trend line. If Bitcoin breaks that upper trend line, then it is giving this leg a partner to the upside. There's one alternative, in that it's not creating a triangle at all, and that it's creating a WXY. As you can see, a WXY extension brings us right up into that point of breakdown. What it would mean is this leg is going to get a partner very soon to the upside. Then at that point is when we will put in the B wave and then come down for the C wave. Let's take a little closer look and talk about the options. Remember, the first option is that this is A, B, C, D, E. This would mean further contraction and then a break to the downside. The second option is that this is A, B, C, D, E, and that would mean that this leg would get a partner to the upside, coming up to the point of breakdown. All of this in between is insufficiency. It would have a very easy time coming up to this point. And then the third option is that this is an A wave. It's pulling back for a B wave, and then it's going to give us a C to the upside, creating a W, X, and Y. Now, there is a small possibility that the correction ended here and that it is completely over, and that this leg is the start of something, but it would have to be a diagonal. That would put in a wave 1. It would mean that it's pulling back for a wave 2. So invalidation for that bullish move is this low. It cannot take this low out. It's got to remain in this area, preferably where it's at and not coming through this support. My bias is that we will get the pop to the upside, but that this is not the start of something. My bias is that it'll put in the B wave and then come down for the C, but it doesn't mean that I am correct. All right, so let's take a look at ETH. ETH has the same exact options, but we're going to go over it. As you can see, ETH is trying to hold this trend line. It's very close here to breaking it. If ETH breaks down further, we do not want it to come through the $1,200 mark, preferably staying on top at $1,350. This is the low that we do not want to come through. The bullish option is that ETH has created a wave 1. This pullback was a wave 2. This was an additional wave 1, and that it's pulling back for a wave 2. This would be extremely bullish and would mean that ETH will soon to go back on a bull run. The not so bullish option is that ETH is going to give this leg partner to the upside that could possibly take the all-time high. Again, the higher the B, the more bullish. And when this leg gets its partner, it could potentially never revisit this low. Looking at the lower time frame, ETH has the same exact options. The triangle A, B, C, D, E that puts in this B wave and then it breaks to the downside, giving this leg a partner. Or A, B, C, D, E, and then this leg gets a partner to the upside, creating a higher B, coming to the point of breakdown, and then this leg gets its partner. Or it's not a triangle at all, and this wave will get a partner leg to the upside, creating a W, an X, and a Y. Putting in this B wave, and then coming down with the partner leg. So let's take a look at XRP, and let's talk about the bullish option first. The bullish option is that this expanding diagonal put in a wave 1. This WXYXZ put in a wave 2. That XRP created an additional expanding diagonal for a wave 1, and that it's currently pulling back for a wave 2. I would like to see XRP not come through this floor. Coming underneath that floor would be bearish and would not make any sense. But complete invalidation is at 29.96, this low. So if XRP is going back on a bull run, we do not want it to break the red line. The alternative option is that XRP created a WXY and then created an additional WXY to the upside. This would be a bear market rally, but if XRP can put in a connector here, it can still move to the upside, giving this WXY a partner, even taking this all-time high. Then, when this leg gets its partner, it's possible that it never revisits this low, just like Bitcoin and ETH. And of course, it's always the possibility that all three are done and that the bear market rally is over and that all of them are putting in their partner leg and this is the start of it. Taking a look at the lower time frame, the bullish option for XRP is that this bounce to the upside was a wave 1. That all of this price action to the downside is a wave 2. XRP cannot break this low at 43 cents. That will invalidate this being the start of something. But more than likely, what is happening is that it's putting in a connecting wave and that this leg is getting a partner to the upside. The higher this can go, the better. So that when it puts in the B or the X, when this one's partner leg comes, it can stay on top of the support that we don't want it to break. This would make that connector or wave 2 that we're talking about. So I hope this was easy to understand. Let me know in the comments, and I will see you in the next one.